Oh, this was the other one. So I said that what was the first one there? Hightower Advisors, they're buying Bitcoin, 68 million. And then this one is South State. They manage 34 billion and they have ETF exposure to IBIT and Grayscale per their 13F filings. So it doesn't say how much they have, but interesting nonetheless. They have 300 plus branches across Florida, Alabama, Georgia, Virginia, and the Carolinas. So South State Bank also is getting into Bitcoin. I mean, it's to me, it's like, okay, well, we see these things, we hear these things, but just stop and think about that. Stop and think about that and think about the implications there. Like Bitcoin was designed to separate money from state, right? And that's the whole idea there. So we knew that banks were kind of going to be turned off by Bitcoin, but seeing fund managers like that, seeing banks buying Bitcoin ETFs, it's the start of it. It's just the start of it. Because if you see things how I do, these banks are going to be buying, they're not going to be buying the ETFs in 5 years from now, 10 years from now. They're going to be buying Bitcoin and they're going to be holding Bitcoin. And they're going to be holding a key to clients' Bitcoin, and they're going to be issuing debt based on people's Bitcoin. That's the longer term vision, I think, for the banks. But it's still interesting to see that they're embracing it right now, just to have some exposure to it. And I think the risk management side of things, I think anybody who's ignoring Bitcoin right now is going to be in some trouble. If they're not already, they will be in trouble. If they continue to ignore Bitcoin and refuse to hold it within their funds and have their clients miss out on all the gains that we've been seeing through the last 15 years, I think they're going to be in some trouble. So we could just be at the stage right now where these fund managers and these banks are basically just buying some to avoid any sort of liability from their clients, because they do have a thing called a fiduciary duty to act on behalf of their shareholders and their board of directors. And if they're not investing their reserves in the best possible assets, then they are liable for failing to do so.